Hello and welcome to another update video about Bitcoin. Yeah, a rather quiet day today, as already suggested. It might be, in the previous video, talked about that earlier today already when I looked at the Bitcoin chart. And we looked at this potential, you might call it a bear flag maybe. Either way, we had a strong sell-off yesterday, so far only in 3 waves, which would suggest one more low might happen because it could be a C wave of wave 4. And I highlighted to you, okay, so that's going to be the perspective as long as the market stays below resistance. Okay, what's the resistance level? Well, the nearest resistance that we have on the chart is the 70,174 to 69,258 USD range. It is a range because obviously, there is, first of all, it's a volatile market. So you have to have a range, and also there is a little bit of uncertainty left in the markets, even if we use Elliott Wave to, to reduce the uncertainty. Okay, you can never eliminate the uncertainty, but we can reduce the uncertainty. And by reducing the uncertainty, we can make more informed decisions. So the way to do it is we have a wave count. We have the yellow scenario that we're watching here, in which we are in a wave 4 correction that started here after the third wave topped around the 20th of May. So A wave down, B wave, which did nearly overshoot. I think it just a little bit might have, did overshoot a little bit above the previous high in wave 3 there. And the C wave to the downside is basically now unfolding. Okay, and the C wave has 5 waves. It looks a little bit unfinished. That move up also doesn't convince me in terms of a low being in, but the idea is that this is still a wave 4 correction as long as the price holds above micro support. Now there are a few levels here that really matter. Firstly, what we can do, we can determine the 100% extension, which is a key target for a C wave. So in case really wave A bottomed and wave B topped, what we can do, we can calculate a target for the C wave to the downside. So how do we do that? We take the length of wave A, go to the high of the wave B. So, and this is it's a common way of doing it. And just because the 100% extension level, it's a key target, okay? It's not the only target. There are other levels as well, but the 100% extension is sort of the first one to watch. And it is pointing to 66,335. Now, I'm not entirely sure if we get there. We don't have to get there. It's just another additional level to watch. If we get close to it, then watch for a potential reaction. However, from here, it would mean quite an extended fifth wave to the downside, which is why I'm saying I'm not sure if we're going to get there. One more low might be enough, and if one more low happens, it should send the price, well, to test that area here around 67.2K. We have previous swing lows in that area, so either way I would expect a bounce. But this is also a key level for a fourth wave in general. It's the 38.2 retracement, and from there, the next move to the upside, possibly in circle 5, could start if really circle 4 is complete. Important is, so that's the 38.2 fib level. Then we talked about the 100% extension. Another level to watch is the 50% retracement. That is normally, for me, the limit for a fourth wave. I don't want a fourth wave to go below that level. Sometimes it happens. If it does, not too much of a problem because we're dealing with a wave 4 in a diagonal. If the wave 4 was part of an impulsive structure, the 50% fib level would be the limit. But because we're in overall diagonal, at least that is my thesis, I can give it a little bit more space down to the golden ratio level, the 61.8 retracement at 64.4K. But I still say ideally it holds here. So ideally it doesn't break below that 50% retracement level there. Because it's just a level. It's just a level to watch, right? It's just that probabilities already start to shift towards something more bearish below the 50% fib level. But if it's a diagonal, I've got that additional buffer zone there down to the 61.8 retracement. And also what you can see, the 61.8 retracement level partially overlaps or nearly overlaps. There's at least a cluster of support, with the 1.38 FIB extension. So the white zone indicates the common target range for the C wave. So these are just additional levels to watch, and what we can do with them, we can reduce the uncertainty in markets. I still have no sign that really a substantial top has formed. A more substantial top would be the white B wave, in which case, if that's the case, we would be moving down in a larger C wave. And I do have to bring back, I accidentally must have deleted this in one of the previous videos. So I have to bring I have to relabel that. I don't know why I did. I didn't move. I have to put the counts back on the chart. Unfortunately, I must have, deleted them. So I'll have to do that. The key is this would be a third wave top here around the 13th, 14th of March, and fourth wave pullback either bottomed here on the 1st of March, which is possible as long as we're holding the micro support zone. Below that level, we're likely testing the main support zone that we're also looking at on the daily chart. That's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.